Hello, good evening, everyone. Can you hear me? Can you all see the screen? All right. Okay. Can you all see the PPT? Wait a while. All right. So yeah. So can you all hear me? Because here got some raining and maybe this is a new office. There's some echo here. All right. Okay, first of all, good evening, everyone, and thanks for coming to these sharing sessions. My name is Ming. I'm actually a full-time trader for the past 7 years, and now I'm in this education field. So I trade forex, stocks, cryptocurrencies, and also do automated trading, like using grid trading. So today I will be sharing with you all about how to screen the stocks. How do we pick the stocks by using this screener? And then we try to trade using this stock list. All right. So here, how many of you all are new in trading? So I guess this is a beginner guide. So I assume all of your is beginner. So I will try to go through in a simple way, explain it in a simple way. All right. So basically, I will scan the stocks by using technical analysis. So before that, I will um, explain what is briefly explain what is technical analysis. So technical analysis, usually we use the past historical price movement and we try to predict the future trends. So we try to do analyze based on the past price actions. So in the markets, there is some certain kinds we have to. Okay, okay. So that's not my problem, right? Okay. So technical analysis, basically we use these previous price actions and then we try to predict the future trends. So all these price action actually they will keep on repeats. Like the markets will always like sideways, then accumulate in the accumulation phase, markup, then distribution, and then markdown, which is distributions. So it always goes up and down, goes up and down. However, we try to predict the same movement that keep on happening. Then we only trade those repetitive movement. Then this is where we use this technical analysis to make an entry. So usually we use technical analysis, we will use charts. In charts, we use Japanese candlesticks. If you all follow me, last week I explained what is Japanese candlesticks, but no worry, later I will explain it. Uh, I will explain it too. Then in technical analysis, we will also use indicators. Indicators like moving average, relative strength index, and also MACD. Then we also use these chart patterns like head and shoulders, flags, triangles, double bottom, all those like very common chart patterns. And then the famous one will be using trend lines and also support and resistance levels. For all these technical analysis, I actually had already shared last week. So this is just an idea about what we use what we use in technical analysis. We use charts, we use indicators, we use patterns, and then we use trend lines and support and resistance. So let me briefly go through what is technical analysis, the basics. So for those who don't know how to read the chart patterns, here's the introduction. So for the green candlestick you see in the chart, usually it is a bullish candle. However, maybe in the Hong Kong side, the red one is the bullish candle and the green one is the bearish candle. However, in Singapore, I think we normally use green as a bullish candle and red as a bearish candle. So you all can see, usually the bullish candle, they close with a high price. The open price, share price will be at the low, and the closing share price will be at the top of the solid candles. And the upper shadow and the lower shadow will be the price highest and the lowest of the day, higher price of the day. For the red candlesticks, it is the bearish candle. So when you see the red candlesticks or in maybe in Hong Kong, uh, red candles is a bearish candle is a green candles. And the opening share price will be the top, and then the bearish candle closing price will be the bottom of the solid candles, and the upper and lower shadows will be the price that the highest and the lowest price of that day. Of that day, 1 minute or 1 hour depends on the chart, the time frame of the chart you see. And then we usually trade following the trends. So usually when we uptrends, when the market is on uptrends, we try to make a long. We try to make a long on the retracement. And then we try to avoid those sideways trends because it is hardly uh, we get profits from it. However, in sideways trend, we try to do a scalping, which is like a short-term trading. We cannot expect a very huge price movement. And then for the downtrends, when the market is on downtrends, we try to short it when the market is on the retrace back, rebound back on every retracement. So for uptrends, usually the high will become higher and the low will become higher. And then for the downtrend, the low will become lower and the high will become lower. So we need to determine now the market trend is on which trend. Now the market is on uptrends and or downtrends. Usually this is very subjective because sometimes the long-term uptrends inside there's a small downtrend, or sometimes for the bigger perspective we will look it as a retracement only. So it depends on the time frame you trade. Like for long term, maybe like 4 years, the S&P is like S&P 500 is on long term uptrend, right? However, there's a lot of retracement in between. The long time frame is uptrend. However, there's a lot of retracement, or sometimes they call downtrend. So it's really a perspective matter on how you see the time frame. All right. So if you want to trade, usually we want to determine that now the price, the market trend, what is the market trend? If you know how to read the market trends, we also only try to predict the market trends. You cannot win 100%. However, we try to entry the high winning probability trades. So trend is a must. We have to look through to open long or short. So usually this is how the low downtrends looks like. And when the downtrend become uptrends, the high become higher, and then the low become higher. So this is how we draw the trend line. We try to connect the high and the low of the share price. And then this is the famous retail chart patterns, which is double top and double bottom. This is the basics on, I think most of the books outside there, they teach this how to trade double bottom and double top. However, if you notice that I stated it is retail chart patterns, so normally it does not have really high win rate because many retailers know this uh, strategy. So I would say that we try to avoid trading this double top and double bottom. However, we still need to understand how retails think now. And then usually, this is a much more advanced stuff. I just share it a little bit here. Usually, the knowledge you have learned outside there is those the big shark wanted you to trade like this. Your winning rate can sometimes you can win, but in the long time frame, usually you use this retail chart pattern. Usually you will lose a lot because they will try to hunt everyone's will put the stop loss at the same place, and then the market makers will or the big shark will try you hunt all these stop loss, and then once you get into this stop loss, the market price suddenly reverse. This is why most of the traders they will get stopped out, and then before the big wave come in. This is very common in the market. So we have to know where to put our entry. Usually retails cut loss is our entry. If you want to become a more successful traders, you have to find out that where is the stop loss of the common retailers, and then we try to avoid making entry in those phase, in those area. So this is more advanced stuff. I hope that I can share you with you all, I think in futures, but it really depends on the market response. Yeah, so never mind. We just go through the basics ones because we still need to learn all these basics theories before we get into a further technical analysis. All right. So the support and resistance is very common. And then for those who don't really like to use those trend line, those indicators, y'all can try to trade by using this support and resistance because resistance is easier. It is easier to draw when the price keeps on hit a certain area and then it keeps on bouncing. Then we can assume that 2 or 3 times, then we can assume that it's a strong support. And then we try to plot at the high. Usually the high will be the resistance. When the price hit it and then rebounds back. We try to trade between all these areas because when the price cannot go down from the support, usually to heading up, it will reverse head up to the resistance. So there is a small resistance here, as you can see. So this is ideologies of support and resistance. There's a bigger time frame support and resistance, and also lower time frame support and resistance. Depends on what you look, how you look at it. For the short-term traders, they usually look at the small price actions. And then the famous one, I think we will usually use this to screen these indicators to screen the uptrend stocks. Because what is MA? MA is a moving average. It's the closing price of the last, like maybe MA20 is a average closing price of the past 20 days. If the candlesticks stock price is above this MA, it means that for the past 20 days, the price is getting higher and higher. So if it is below the MA20, it means that the price is getting lower for the past 20 days. So we try to enter when the MA20 is above this, is sorry. So we try to entry when the MAs retrace back to maybe MA50, and then when the MA20 started to cross above this MA50, we try to make an entry. So this is basic ideas because I didn't go through very far, but this just basically technical analysis we look at. Usually just around I think this area, like indicators, chart patterns, trend line, and those support resistance, all this stuff. So all this is technical analysis. And then everyone looks at all these technical analysis different because everyone has different risk appetite, and then everyone has different perspective about the markets. Some people say it's uptrend, some people say it's downtrend, some people say it's just a retracement. It depends on your goal. Somebody looks at it for like a few years. Somebody looks at it for even hours or minutes because they want to get out. They just want to trade the markets. So it really depends on what you want. So here I just give a guideline and or an idea how you all screen the stocks. We all have to know the ideology behind this technical analysis, what we are screening. All right. So usually how we pick stocks based on technical analysis. So to be safe, we try to trade a good stocks because in the long term, the good fundamental stocks tend to goes up. So we try to buy a good stock in case there is something happens, you still hold a good stock, right? And then we try to draw the trend lines or support and resistance. Then we determine by using these indicators, and then we can determine the chart patterns too. Then we find the entry point. So these usually the steps on how we use technical analysis. So you can actually filter by using MA because MA is looking at the bigger trends of the markets. Then we draw a simple support and resistance. You also can trade it that way. But if you add more indicators, usually add more confluence, right? It add more confluence to your entry. However, if there is more factors in choosing a stock, usually it takes a longer time to wait all the confluence, the factors align. So it really depends on your appetite, and then you have to pick maybe one, two, and then you have to keep on back test by looking at the markets. So so people say that technical analysis is very easy. Actually, it's not. It's actually a hard work because you have to recognize those. You have to look back and make a back test about this market, and then you have to keep on learning the chart patterns, and then you have to plan your own trades, and then follow it like very disciplinedly. You have to be very disciplined to follow it, and then it's not that easy. But I would say if you master this technical analysis, at least you have an edge in the markets to become a profitable traders. All right. Then lastly, this is the most important one, which is risk management. I think if you can't do a good risk management, usually will fail in the long run as a trader. Why? Because if your every trade you lose 10%, if until you lose 50%, you need to get back 100% to remain break even with your remaining balance. However, if you didn't like entry too big, like maybe you know your cut loss will only be 0.5% or maybe 1%, you don't have so much stress in the markets. All right. Those who invest very big in the markets, usually they have very big drawdown. So if you face a very big drawdown, your emotions will not that stable, and then you are more prone to do very stupid decisions like cut low at the bottom, cut at the bottoms, all those stuff, because you put your whole capitals or most of the capitals into the market, and then your risk is too big, so you tend to do a wrong decisions because sometimes your trade is good. However, because you cannot like resist the drawdown, then you just cut it at low. However, if you just entry based on maybe 1%, then your max tolerance maybe is 2% cut loss. Then when the market trades, maybe you can still add a little bit, and then to make it up, your cut loss is 2%. Then you target a further higher risk reward. So if your if you buy a stock, you always cannot sleep. You're always very nervous, very stressed. When the markets open, you always look at your handphone, your apps, that where is the market direction goes. It means that you are over risk your capital. So remember, don't always over risk your capitals, because if your strategy can be profitable, even though with small money over the time, you can slowly accumulate your wealth. But not if you over risk. Sometimes yes, you can earn a lot. However, in the long run, if you keep on doing like this, eventually you're back to the initial stage. All right. So here, just my small advice. So I hope you all can try to look into this risk management part, because it's very important for you to sustain in this trading or investing marathons. All right. So basically, I will share with you all by using how to screen the stocks by using this trading view. I hope that you all can access this trading view, right? I think you all had heard about this. It's a free website. However, you all can upgrade to paid users. So just a disclaimer, we use Smart didn't collab with this trading view. So I just share my personal preference. I use this to screen my stocks. So here I will give you all some criteria. I will explain it a little bit about how I pick the stocks. And then later I will go into the trading view. Then we discuss about the recent market performance. All right. If you all have any charts you want to discuss, maybe later we can discuss. We can discuss it later. Okay, so you all can open the trading view, and then you all choose the stock screener. And then usually I will scan the trades by using day, then choose the US stock markets and then press the filter. And then all this you all can screenshot. This is my criteria to choose a uptrend stock. Yeah. So the symbol type will be common stocks, and then relative volume will be ones, and the price will be above or equal to zero. Then exponential here, I use the moving average as indicators to scan to filter the uptrend stocks. In this case, I use exponential moving average. Exponential moving average is slightly more sensitive than normal moving average. So it's above the moving average 20 must be above 50, and then moving average 10 will be above 20. And then volume will be 1 million to more than 50 millions. We try not to trade low volume stocks. And then the change will be above zero. All this is just a criteria to pick an uptrend stocks. Then after we filter, we can entry based on our knowledge about this and others trading analysis. All right, so until here, anyone has any questions before we go into, I think, charts, trading view charts? So basically, if you all choose, if you all pick it, if you all filter, pick all these criteria, and then you all do a filter, basically there will be a very long list. I think at least it's filtered out. Then there will be a list of uptrend stocks in the market. So when you keep on scan this every day, if you notice that the uptrend stock getting lesser and lesser, maybe it's a sign that the market trends in the short term wanted to reverse or on the corrections. So we um, try to wait the price to correct down, and then we try to find try to enter at a better entry. All right. So this is how we use TradingView to filter the stocks. Later I will go to the live charts, and then we try to find which stock is still a good one. And yeah, I do hope you all can maybe put more questions in the chat box so I will know that what you all wanted to know. Yeah, so this is the chart how we determine the big trend, micro trends, and then this is I think not common people talk about this, and usually there's a phase when the smart money come in. It's usually the stealth phase, like when the Nvidia is around maybe $10 to $20. Then awareness phase when the institution investor came in. Then this normally when the like maybe Nvidia is around $30 to $40. And then usually when we in the mania phase and when there is a media attention, usually the price will be very far from the bottom already. So normally retailers will only get into these stocks at around this phase. So when we know there's a lot of media cover these stocks, usually it won't be a very low. The price won't be very low already. However, there's some room for these stocks to grow. Then you can see, we don't know where is the exact tops, but at least we need to know that where are we, which phase are we in, approximately which phase. So for my view, we're actually in some maybe mania phase to blow off phase, but we don't know when will happen. But we need to be careful because when we buy at the slightly tops there, you wanted the price to like flip. It's not that easy for the price to flip because the risk reward is not that good already. So we need to know currently it's still on uptrends or sideways or downtrends. So all this we have to figure out ourselves because this chart just serve as a big cycle chart guideline. So I just share with you all these valuables um, charts that I use the most in my investing and trading for the past 7 years. All right, so until here, so after the mania phase, usually you will come out with blow off phase when disbelief people will disbelieve this stock is good, is going to become bad, and then capitulations happen, despair happens, and that one is endless cycles, and also it's a time to rebuy the stocks. So this is a cycle, and then we try to use the screener to try to enter, and then we look at the big picture. We use this as a guideline. All right, so I think today class is very fast for the theory class. So yeah, so I will get into the live trade sessions. It's not a live trade, just disclaimer, just for education purpose. All right. Yeah. So all right. So this is how we choose the stocks. Um, Sorry, the laptop is a bit slow. So we pick the US stocks, then we try to filter it. Then I usually trade the bigger cap stock because it's more fundamentally is better when the market cap is bigger. So as you all can see, Meta is still on uptrends. So you click into it, and then we look at the charts. So usually you see day. In the big trend, we try to trade day. Okay. Later the price pre-market is 3737.47. So, however, the price for me is too extended. So I will usually try to look at the price that already retraced. So recently, all most of the price I think is very extended. So for very extended stocks, I try to avoid because it tends to lure people to buy into the very high price, and then when the correction happens, we tend to uh, trap at high. Yeah. So there's still a lot of stocks that is on uptrend. So if like you all scan a good stocks, we try to wait to retrace. You put it in the watch list and then we try to retrace. So basically all these are still uptrends. Yeah, if you all filter every day, if you all keep seeing a stocks that keep on repeating, maybe you all can just put it in the watch list because usually the uptrend stock when a trend is happen, it won't stop in a short term time periods. The trends will be like maybe months to weeks to months. However, we have to do our works on finding out the fundamentals of the stocks too. So this is basically how I screen the stocks. But however, now most of the stock is very extended, and then I would say that if a stock is very extended, usually we try to avoid it by not trading any any stock. Yeah, usually most of them is very high. Mm. Recently, this SMSCI is doing reversals, but in the bigger pictures, I think it's on long-term downtrend because it's like getting lower level. Maybe here can goes up and then goes down, continue goes down again. And recently, some energy stocks is uptrend, and then yeah, all this. There's not much of big cap stocks is on uptrend, so we also must be very careful. So this is how we filter out all these uptrend stocks. We just have to find when the market is retraced. We just try to like put in like the top five, then we scan it every day. Then we'll see which stock is keep on coming out in the filter list. We try to trade those stocks. All right. So I think today's lessons ends here. So if you all have any questions, maybe can let me know. No questions. Uh, so you all can just try to play a lot by using all these indicators that the trading view gives this filter. So this is just a guideline for you all. So you all can incorporate into this technical analysis into this filter, and then you try to find the stocks that suit you the most, and then you try to enter based on technical analysis, and remember do risk management. All right, if there is no other questions, maybe I will end it here. But uh, so so if you are interested in this, you all can contact me through WeCom. WeCom is a which actually you can use WeChat to add me at my WeCom, or we just open a Telegram group. However, there's not much people active there. So if there's more people, we will try to share more about this trading sessions in coming days. So do let me know if this kind of classes helps you all, and then maybe you all next time you all can try to invite your friends and families to attend these sharing sessions, because I do believe that before we enter the markets, we need to have equipped with good knowledge, like so we can face the markets. We know how to face the markets. If not, we are just basically like gambles in the markets, because we don't know what is the edge, what is the probability of us winning. We try to use technical analysis to increase our winning probability. what is what is retracement? How do you apply it in the uptrend? Okay, I uh, go back to the charts. So it just simply maybe I will choose. Okay, can yours? Okay, so this is Cisco, right? Cisco. So this is one of the filter. Usually we'll just draw uptrends. So uptrend actually is you cannot, it's a zone. You cannot just direct like if you link all this lower low, it will become like this. It's very subjective, right? So for me, if it's the long term is going up. So for here, you can see at least you can trade when you retrace to the trend line. When you draw this, so you can, when every retrace, you can try, and then it reject, then you can try to entry. Because why we can entry here? Because there is a resistance. Previous resistance, it broke out, and then we retest it. When they retest it back, the previous resistance becomes support. So when the candles, there's a bullish engulfing candles goes up. So we try to enter it here. So it really depends on how you see. For me, usually I will just try to trade support and resistance. So when we retrace to the support and resistance, let me draw it again. Okay, so we can try to draw the, sorry, again. So here previously, here's got a lot of resistance. When it hit it, it draw down. Then suddenly it breaks out the resistance, then it goes down. Then we can wait another one to break out. This is small breakout, retrace, and we try to buy along this trend line, because you will stick, you'll draw this trend line. This 2 point already can let you to draw this uptrend line. Then when you try to close it here, you try to buy it. And then here you can also see is also another resistance. Right, previously it's a high there, and then at the right side it hit up, and then retrace, it hit the trend line, and also it's a previous resistance become support. And then if you try to buy it back here, you try to buy it here. So okay, you try to buy it right here, then you can continue to write it. So you can do a very small scalping or short-term trades from there. We try to buy when the price fall into the supports, like maybe it break previous resistance and then it tests back to the previous resistance aligned with the uptrend stocks. So this is how we enter the based on the retracement. But it's a patience game. You have to wait until all these criteria fulfill. Because many people just try to buy in the middle of nowhere. So this is how you cannot determine your stop loss. Because like technical analysis, we also use probability. Probability actually um, is not 100% stuff, but we try to increase the probability. All right. So this is how we apply this on uptrends. We try to determine is it an uptrend. So usually the stock pick from this filter is on uptrends. So we try to look at the support and resistance. Is the previous resistance breaking out, then it retraces all the way back to the previous resistance. See is it become a support or not along with the trend line. Then when the the candlesticks show a bullish engulfing, like close low and then suddenly close high, hit low, suddenly close high, then we can try to enter at the market closing. So this is the how we enter based on the retracement on uptrend stocks. I hope I did um did reply answer your questions. So all these you have to back test yourself. Um, But however, the first of all, you still need to filter out which stocks is uptrends, and then you try to pick which one you understand the most. All right. So I think if there is no other questions, um, this will be our. Uh, I think we'll call it a day. And then I do hope you all learn something here, because there's not much people teach about how to scan, how to pick a stocks. Because usually this is the very simple. It is the simplest way for you to pick an uptrend stocks. So do remember that when you can't find any, when there is less and less uptrend stocks, you need to be aware of the markets already. All right. So yeah. So uh, so this is basically you all can consider to add the WeCom and the Telegrams, and then maybe screenshot it, and then yeah, thanks for coming to these sharing sessions. All right, no more questions? Sorry, I just saw no more questions. Then then I will end my sessions here. So before I end, this is the disclaimer and all just now what I mentioned, all this is not a buy call and it's just education for education purpose only. All right. Okay. Thank you very much. Thank you, Richard, for supporting this class, these sessions. And thanks for everyone. Have a great evening and have a great day for supporting these sharing sessions. I see you all next time. Bye.